Hey guys, and welcome to Money Talks News, the podcast. This episode, we're talking about the Midas metal. Gold has been known as a store of value and a hedge against both inflation and global uncertainty for millennia, which is why it's also part of many well-diversified saving strategies, including retirement accounts. Yes, you can actually hold gold in your IRA as long as you follow the rules. But should you own gold at all? And if so, is it appropriate for retirement account investing? That's what we're going to find out today. I'm Stacey Johnson. As usual, my co-host will be financial journalist Miranda Marquardt. Hello, Miranda.
Hello, I am ready to talk about shiny things. Let's do this.
And Miranda's coming to us today. For those of you who can't, who can see her, she is in ancient Egypt today. For those of you who are just listening, there's a sphinx behind her today. Anyway, also listening in and sometimes contributing is our producer, Aaron Freeman. Hello, Aaron.
Hey, I want to hold some gold in my hand. Big old
Me too.
brick.
And guess what? Maybe this week's guest can help you do just that. It's Devlin Steele from Augusta Precious Metals. Hello, Devlin.
Hello. Thank you for having me.
Yeah, well, thanks for being here. Devlin's going to talk to us about everything gold related, including how to set up a gold IRA. Before we start, need to know a couple things. First, we do have an advertising relationship with Augusta Precious Metals. However, I'm not going to let that impact our opinions. You know why? Because we're journalists. That's why. Second thing, remember, this is not financial advice. Make sure to do your own research and consult your own experts before acting on anything that you may hear here. Okay, let's dive right in. Devlin, first, give us a little background into who you are and what Augusta Gold's all about and stuff like that before we get into this.
Sure. Augusta Precious Metals is a gold company that's focused on retirement accounts, and we don't just sell metals to the general public. You have to come to us with a retirement account. We convert that, and it is a company that's based on education. We hold web conferences to really help people understand about gold and silver, if it's appropriate for them, and how it can benefit them. And my role at Augusta Precious Metals is Director of Education. I am a Harvard analyst with an economics background, and I prepare all the materials for the education department to really help the public learn everything they can about gold and silver.
Well, you've already said something that I have to ask you about.
Yeah.
So if I want to buy a gold bar or gold coins or whatever it is, I can't do that at Augusta. You're only IRAs. Is that the deal?
Right. We service our IRA customers with their cash needs, but if you're not opening up an IRA, we don't service the general public. We're very focused on retirement savers, and what's happening to retirement is quite startling.
Explain. What do you mean by that?
Well, when you work your whole life, you're putting money away, and let's say arbitrarily you worked for $100 an hour, and that you accepted your pay and you made your savings based on the ability of that money to work in the real world at $100 of purchasing power. Because at the end of the day, money is not an investment. Money is just an instrument to transfer goods and services from one person to another. And unfortunately, as we print all the money that we do, the value, the purchasing power of our money goes down. And when you're retired and not earning new money, if your savings cannot keep up with the inflation rate and the losing of buying power of the dollar, then your portfolio that you worked for shrinks. So you didn't really work for $100 an hour. You thought you did, but when you retired, you worked for $50 an hour. And so retirement savers have to shrink their lifestyle, and many of them have to go back to work, and many of them have to put off their retirement. So what's happened in the last few years has been quite startling to retire.
Yes, that's for sure. Now, and that is a good transition into the next thing I was going to ask you, which is basically why gold. Apparently, one of the things you're suggesting that gold can do for us is to hedge against inflation. Is that accurate?
That is one of the attributes of gold and silver, and it's known to be an inflation hedge. So if you look back over the last, since 2000 to today, gold has appreciated more than 600%. So it's held and actually acquired above the loss of purchasing.
What about it as a hedge against political uncertainty or, things that go wrong in the world, but seem to be happening with greater frequency all the time now? Is gold a hedge for that? I mean, traditionally it has been sold that way, right?
There are three primary historical drivers of gold and silver. One will be the weakening and strengthening of the dollar. Two will be demand, and three will be global uncertainty and risk. So absolutely, all different types of uncertainty, even what's happening in Ukraine, what's happening with China, more uncertain the times are, either politically, militarily, or any other factor, gold and silver have traditionally gained strength during those times.
Now, a lot of people think that, and I know you don't talk about the stock market. I get that. We talked about that before we got on the air. But a lot of people would use, let's just say generically, a lot of people would use gold as a hedge against other types of investments that they may be holding. Is that accurate as well?
That's very accurate, but there's a definition for that. And it's called uncorrelated diversification.
Oh, okay.
So what happens with most people is because they're in the financial institutions, they are diversified, but they're diversified within one asset class. So if there's a correction, they don't have an offsetting asset, their entire portfolio goes down. That's why so many people see their portfolios go down 20, 30%, where I believe a better type of diversification is considered uncorrelated diversification, where you have different asset classes that behave differently under the same market conditions, therefore having the potential to offset each other. So I think the best type of diversification is when you have a portfolio with different asset classes in it.
Now, show of hands. We don't ever script our shows. Show of hands. Who here owns gold in some way, shape, or form?
Maybe
I'm
my
assuming that you do, Devlin.
Maybe my computer and some of my other electronics.
Okay, so
I do.
I have owned gold, forever. I don't own a ton, but I've owned some my whole investing career, I believe. And you do too, Miranda?
Yeah, so I have my versions of gold are in a couple things. I actually have my own that I have kept at home just in the form of coinage. So investment grade coinage. So I have some investment grade coinage. And then I did have, a while back, I did have some paper gold, so certificates. I don't have them anymore. I've sold those since.
I don't have my Krugerrands anymore because somebody broke into my house and stole them.
No Kruger.
Yeah, that's a true story. About 5 years ago.
Interesting.
But I do still have stuff in gold. Devlin, and obviously Devlin has gold, and Aaron apparently does not. Devlin, do you have an opinion, or are you allowed to voice an opinion on where you think gold might be going?
Well, again, if you go back to 2000 to today, gold's up over 600%. And if you look at the economic position right now, it is setting up a Goldilocks environment for gold and silver. And the reason for that is that you have the Federal Reserve, who was late to the game, tightening and raising rates to fight inflation. And we overprinted money, quite frankly. I mean, we just printed a ton of money.
Yeah, no question. That's what caused the inflation, right?
Right. So you have too many dollars chasing too few goods. And so the typical response of the Federal Reserve is they raise interest rates to try to choke the environment so that you have less dollars chasing goods. Now, what we've seen is employment numbers are very robust. So they're going to have to keep hammering at it. And what they want to do is raise unemployment, lower the amount of dollars chasing goods, lower GDP. And while they're doing that, then what happens is that gold and silver have a direct relationship with the DXY. So as the dollar strength goes up, even though we're losing strength here in the U.S. locally, amongst the international currencies, the dollar has been gaining strength, and gold and silver have an inverse relationship with the DXY. So gold and silver have been holding down or holding still. And then we see the rates go from 0.75% to 0.5% to 0.25%. We're expecting maybe one more 0.25% rise, and eventually they stop raising rates, and then they do what's called a Fed pivot. After they drive the economy potentially into a recession And they try to build us back out of that by lowering rates and pumping money back into the economy. The thing is that no one expects them to be able to get inflation back down to 2%. So when they do this Fed pivot, the reason why it's a Goldilocks moment is because you're going to still have relatively high inflation, probably around 4%, with rates coming down at the same time. And that's just going to put the fuel to the fire for gold and silver. So I'm very bullish on it. Soto Bank thinks gold is going to go to 3,000 by the end of this year. I think that's too bullish, personally. A lot of analysts think silver is going to go to 38. Again, I think that's too bullish. I see more of a 25% type acceleration this year. But when that Fed really makes that pivot, I just think gold and silver are going to take off.
I think that's interesting, and I don't want to get too far in the weeds here. But one of the things, as you mentioned, that is a mover of gold is the dollar. The dollar, the DXY. I was just looking it up. The 52-week is about 115. It's at 103.5 right now.
Incredibly high.
What's
and
that?
I think, just real quick. Sorry, real quick. I think we need to make sure we define the DXY for our listeners. As Devlin said, he mentioned its strength against other currencies, and so we actually need to say, okay, well, the DXY is a measure here; it's an index, right?
Yeah.
And it's sorry, I just want to make sure our listeners understand that we're moved into jargon a little bit. It's
yeah. Thank you for doing that, Miranda, for clarifying that.
It's the dollar's performance against a basket of currencies around the world.
And it has been stronger than it is now. And as the dollar now today, the last couple of days, the dollar, when interest rates rise, let's a tiny bit of background on the dollar. Okay, when interest rates rise or the economy of a country looks good, people shift their assets to that country. The United States has had, when we started raising rates and our economy was looking better than other economies around the world, people put their money into U.S. assets. How do they do that? They do it with dollars. What does that do? It makes dollars go up against other currencies like the euro and the pound and the yen, etc. So the dollar has been historically strong. I mean, really strong. The euro, which was $1.30 compared to ours just a couple of years ago, was trading at parity not long ago. Now the dollar has started to come down as other countries have raised their rates, and we've stopped raising ours as much. Am I saying this right, Devlin? Is this basically correct?
You are. Just as the comparison, we were down in the high 80s just a couple of years ago.
Yeah.
So, I mean, we haven't seen dollar strength like this in a very long time. And this confuses people because how can the dollar be strong when you go to the supermarket and your dollar is buying so much less? So nationally, locally, the dollar is very weak. Internationally, the dollar is very, very strong, stronger than we've seen almost forever.
And as the dollar goes down, that should help gold prices go up, right?
The dollar, when we pivot and with everything else going on, the dollar will start to, I can't say, the dollar should start to come.
Right.
And as that dollar comes down, then gold and silver really start to take off.
And indeed, as the dollar has been dropping the last several months, gold has gone up. I don't know if it's up as we speak, but it has been getting higher.
Gold in the last couple of months is up 18%, silver up 25%. So gold and silver have been doing very, very well. They pulled back recently just a little bit because of those employment numbers. And because those employment numbers signify that the Fed will probably do another rate increase. We were expecting them to stop altogether. But, these employment numbers represent most likely another Fed increase.
Yeah, more than likely. Okay, let's take. Let me pay some bills here, Devlin, real quick. Ad, and then we're going to come back on the other side of that, and we're going to talk about how exactly you buy gold in an IRA, because I really don't know, and I'm really curious.
Actually, I have an 8th grade science question, and Devlin's a teacher, so we're going to have that too.
We're going to do that too when we get back. Okay, cool. We'll be right back after this, guys. Okay, we are back. Before we start, do something for me. If you appreciate what we do here, do something for us and share this show with your friends and family on your favorite social media platforms, and subscribe to our podcast. Takes you 2 seconds to do that. Really helps us. So please do that for us. Okay, now let's get back into the discussion. Aaron, you had an 8th grade science question. Please, let's hear it.
Well, I got to imagine, I mean, anybody's thinking about wrapping their 401k into a gold IRA, they're going to have this question is why gold? And you guys were describing earlier, everybody's talking about a currency. Is gold still a currency? Because from a science perspective, it's not as rare as platinum or uranium or rhodium or palladium. So why is gold still this go-to thing to back everything up?
Good question.
Gold has been a currency, and the first currency and a remaining currency for over 5,000 years. Man has subscribed a value to it in that way, and it has held value. One of the things about gold and silver is that it has kept its relative purchasing power and through every economy, every currency's died, through every currency, through every political superpower, through religious powers, through every single power, gold has sustained itself. And when you look at wealthy families have stored wealth and transferred wealth generationally in 3 main assets, which would be real estate, art, and precious metals. And, it's just the way it has always been. And it continues to be that way, and I don't see it ever really stopping.
By the way, I would not call
honestly,
it gold a currency. I'd call gold a store of value. I wouldn't call it a currency.
I was going to say, in some places you actually can use. I believe Utah is one of the states that accepts some types of gold as currency as well. If you go to the right stores, they will accept it as currency.
Utah, do they have they have the little weight and measurement thing in the store?
Like Utah allows it as a state. Like as long as it's specific types of gold, I believe this is. I'm going to have to double check.
We don't have to
now,
argue semantics, but it doesn't
but I
really
believe
matter.
that Utah is one of the states that does allow stores to accept gold as currency.
That's pretty cool.
Yeah.
Well, I don't know about you guys, but I am dying to put some gold in my IRA.
Let's
but
do
I
this.
don't
Let's
know
do
how.
this.
If only we had someone here that could tell us how to put gold in an IRA. I mean, because I really don't. Is this physical gold? Describe the process, Devlin. Tell me what happens when I call up your company and I say I want to put some gold in my IRA. What do you do? What do I do?
So what's interesting about it is that all IRA structures follow basically the same rules as far as contributions, distributions, minimum required distributions. When most people start, they start in the 401 that goes through financial assets that are allowed in the 401k. And it's managed for them. They're not out there self-managing their IRA. Now, what most people don't know is that you can transfer your 401ks or IRAs, a portion of them, into what's considered a self-directed IRA. And that self-directed IRA means that you are in control of it. No one is doing the buys and sells for you. You control all the buys and sells. So you're basically liquidating a portion of your money from your other accounts, transferring it over into a brand new IRA that, if you're buying from Augusta Precious Metals, we help you set up and do that transfer, but it's with a non-banking custodian. So it's with a third party. And that money, when it's transferred there are a lot of alternative assets that people can invest in. They just don't know about it. You can even put money into real estate with your IRAs. You can put money into you can put it into tax liens. You can put it into all sorts of things. And one of the what's called alternative assets that people can invest in with a self-directed IRA is physical gold and silver. There'll be 3 entities involved. There'll be the custodian, which is keeping you, they're basically bookkeepers. They keep you compliant with the IRS. There's a depository that is insured and holds the physical gold and silver for you. And then there's the precious metals company. But it is a non-taxable event because you're going from a retirement account to another retirement account. And it puts you in control, and you can buy gold, silver.
And you don't have to do the whole thing, right? You could do just part of your IRA.
Yeah, you can just do part.
And now I would imagine, hearing this description, is the custodial nature or the custodial fees, are they higher than they would be in a Fidelity or whatever?
No, let's just use a simple number like $100,000.
Yeah.
the average 401k is charging 2.4% management fees per year for a 401k.
That's very high.
Let's use 1%.
Yeah.
Which it's not 1%, but let's use 1%. So that's $1,000 a year for that $100,000.
Yeah.
The custodian, it's a $50 one-time application fee, and then it's $100 a year regardless of the amount.
Wow.
You could have $200,000 in there, $300,000 in there. It's $100 a year. The depository is equally $100 a year regardless of the amount. So the first year is $250. Every year thereafter is $200. Really, really inexpensive.
Yeah, that is inexpensive. Now, what about the gold itself? I'm buying that through Augusta in the situation, right? Okay, so am I buying Krugerrands? Am I buying American Eagles?
Right.
Am I buying bars? What am I buying?
Because there's only certain types of gold that can be held in the IRA, right? You can't just buy anything and just say it's in your IRA, correct?
Oh, I didn't know that.
Right. You have a partner in this, the IRS. So they want to make sure that you're investing wisely, and they also want to make sure that it holds value and that you're in the approved types of metals. So, and it cannot be a collectible.
Right.
And for silver, it has to be 99.99% pure. For gold, 99.95% pure. There are a couple exceptions for that, but there are reasons for that. But that makes it very limited. You have bars, you have eagles, you have maple leafs, you have American Eagle proofs. You have there's probably a dozen or maybe 24 different assets that you choose between, and you're in control of the IRA. So what we do, we're not financial advisors. We can't tell you what to buy, and we can't buy for you. We show you all the different metals, tell you the features and benefits, and the individual has to choose their own portfolio.
Cool. And you guys obviously make money on the spread. I mean, you're selling the gold at slightly higher price than that's how you make your money. Now, how big is that? Because what I'm going to do, if I'm going to do this, is I'm going to look and see how much an ounce of gold is right now, right, on the COMEX. I'm just going to look and see. And then I'm going to say, how much is you charging me? And I'm going to say, well, how come I assume it's going to be higher than the spot price of gold. But how much higher is it going to be? Or does it depend on how much I'm buying or something like that?
No, it doesn't. We have one price. It doesn't matter if you're buying $1 million or you're buying 100,000. It's one price. So a lot of the common mistake is trying to figure out how much it is above spot. Spot price is the price for the raw ore. The only people who buy physical metals at the spot price are the mint manufacturers. They buy it at the spot price. They melt it. They add a little bit of copper because these are soft metals and that's the binding agent. And then they bind assets, like we just said, bars, eagles, maple leafs, etc. At that point, the mint manufacturer charges a minting fee for that asset. And then there's market demand on that asset also. So every single asset will have a different price above spot. So there isn't a universal price above spot. So the wrong question always is, what do you charge over the spot? The right question is, what do you charge for a bar? What do you charge for an American Eagle? Because that's how you can compare vendor to vendor and see what the price is at.
And should you do that? Should you compare vendor to vendor?
I think most of the good vendors are the top ones that Augusta is are pretty much within pennies or dollars of each other.
Yeah.
I think what's important is, you mentioned this before, the spread. So on common bullion, the spread is 5%. And so what you're looking at, what's called a bid ask. What is the asking price and what is the buyback price for the asset? And that's because that's, at the end of the day, that's what you have to overcome to be in profits. Because if you bought $100,000 from us today of American Eagles, on the same day we buy it back for $95,000.
Okay.
So you have to overcome that 5% spread in order to be at break-even.
Now, that reminds me of another question, too. That what I've been giving people financial advice either on television or as a financial advisor for 40 years. And what I've always said is, you want to own some gold. You don't want to own a ton of gold. You want to have about 10% of your assets in gold. Do you agree or disagree with that statement?
I disagree with that premise because financial, no offense, but that's the old playbook that's been around for a long time. And the question is, why 10%? If you can't give me a theoretical reason why 10%, then it's an irrelevant number, because really you have to look at everyone's portfolio differently. What are you trying to achieve? And really with gold and silver, if you look at 2008, for instance, in 2008 to 2011, gold went up over 100%, silver went up over 300%. The average investor in gold and silver in that period of time between gold and silver probably doubled their portfolio size. So if you had $1 million out in other assets in 2008, most people lost 30%. So that would be down from $1 million to 700,000. If you had put 25%, had the foresight, put 25% to gold and silver, then your 750 loses 30%. That's now you lost 210. Your 250 in metals in that time would have probably appreciated to another 250. They offset each other. So the question is, what is the right balance for an individual to have an offsetting asset that will have a meaningful difference in a volatile and unstable market?
And what's your answer to that?
What we're seeing currently, I don't give financial advice. So
oh, right. You made that very clear before we started the podcast. So you wouldn't say any percent that people should have.
No, I can tell you that what we're seeing is the bottom number that people are using these days is 20%.
Okay,
that's the bottom number that people are using.
So you're saying 20% or more. You guys are seeing.
Some people just want to store their value. They don't want to take any risk. They don't know what's going to happen in this world, and they just want to be on the sideline. And if you're in the sideline in cash, that's not good, because your cash is, you can't put your cash under your mattress, because you come back to it and it doesn't buy what it used to buy.
Actually, though, Devlin, I've heard people say this is true about stocks and gold now, particularly because people are saying, hey, I can earn 5% on T-bills. Gold's not paying me a dividend. And stock market could go down, so could gold for that matter, but you know what I'm saying? So, and actually, for the first time in 40 years, I have started putting money in T-bills or treasuries of some sort, there's no way to lose money at 5%. So, some people could make that argument.
There's like I said, I think gold and silver should be a portion, not everything.
Yeah. I think
I believe gold and silver are going to do much better than 5%.
Well, I hope so, because I own some. Now, and we're going to, by the way, anyone listening to this, if they want to hook up with Devlin or learn more about Augusta, we're going to have links in our show notes to do that, so you'll be able to. And I might do that myself. I mean, I have owned some gold in different forms for my entire investment career, as I said. But this could be interesting.
I have a question I wanted to piggyback up on, because I wasn't sure if I'm right about this or if I heard it right. So you said this isn't a managed fund, this gold IRA. So that means pretty much if you put your money in, like any IRAs, you can buy and sell. So you could, in theory, keep on top of the price of gold and then, sell the top, buy at the bottom, and all that kind of stuff.
Devlin?
Yeah, but there are a couple of caveats. One is, gold and silver, you should be going to gold and silver with a longer term vision for it. You shouldn't go in with short term liquidity needs. If you go from 2000 to today, gold's up 600%. There are dips along the way. So, and those dips can be quite substantial at certain points. So you should have a longer term staying power for gold and silver, and you shouldn't go into short term liquidity. If you're an older individual who is living off of distributions, gold and silver is not for you. It's not something to get rich quick scheme where you put it in and you're going to sell it in a year from now and make a ton of money. It should be a longer term stability play for a portfolio, especially for retirement accounts. Another thing is we have a minimum that we require people to have at least $100,000 in retirement accounts, and our minimum is $50,000 as a purchase. That we're not looking to sell gold and silver to everyone. It has to be right for your portfolio, and that's why we require everyone to go through an educational webinar with us, where one of my educators, one-on-one, will go through all the aspects and really help you qualify if gold and silver is right for you.
Interesting. I'm glad you brought that up. So we've got to have $100,000 in our IRA total. and we've got to invest at least 50,000 in gold for you guys
Correct.
to even deal with us at all.
Right. That's correct.
Okay.
Cool.
Can you make the minimum, Miranda?
I could make the minimum.
That's what we like to hear.
I've been building a retirement portfolio for 20 years now. I could make the minimum. Hurrah.
Okay. You gonna cash in some of your Bitcoin to put it in gold?
I know. I have already cashed in the Bitcoin I'm going to cash in near the top of the market. Now the rest of it's just gravy. I'm going to wait to become a Shiba Inu millionaire. That's where I'm at.
Oh, yeah.
I may not live long enough to see that, but I'm going
You
to
will
try,
not.
Miranda.
You will die
No,
before that
most
happens.
certainly. I may not even last the weekend.
You will die before my crypto makes me a millionaire.
Yeah. So, Devlin, I think do you have anything else here? You haven't had much to say. Anything else before we cut off our podcast today?
No, I asked the questions I had. I mean, obviously there's that whole thing online where it's, the millennials and stuff like that going, hey, crypto versus gold.
Actually, I was just going to say that. I'm reading that a lot.
Who's a better hedge against inflation and stuff like that. But
Dude, I made some good money off crypto, and I would still, if I was going to pick a long-term thing, I would still go gold. And I've made good money
I think
off
I
of
would
crypto.
too. I mean, it's hard. It's hard to know.
I've said many times I'm not a believer in crypto, so.
Well, I've never seen anything. I've never seen the differences of opinion on crypto. I mean, because some people I really respect are like, this is toilet paper. It is trash. It is never going anywhere. And then some people who I respect are like, well, this is awesome. You have to buy it. Same thing with gold, actually, although you don't see people say gold is horrible. Some people like it better than others.
My main issue with gold, specifically if you're going to hoard physical gold, is when the coming apocalypse is upon us, you can't eat that. and so I've got my food storage and my guns and my ammo, and I'm ready to go. So,
Miranda, I find things about you all the time that I find really uncomfortable. And this is the one.
I'm
That's
just
why
realistic. If it all goes to shit, gold and silver really aren't going to help you much. Let's be honest.
Actually, if there's an apocalypse, we'd actually probably return to gold as a form of
and I'm afraid
cash.
we're out of time now.
Aaron and my son and I have a plan because
Before someone brings up zombies,
I was getting there.
Devlin is I know. I was
Devlin's
afraid
like,
you
okay.
were.
Devlin's
Devlin
like,
is a
this has gone off
serious
the
man. He
rails.
does not want to hear this. Devlin, do you have anything else you want to add before we close today?
No, it's been wonderful. I mean, as far as crypto, if you want me to comment on it.
Yeah, sure.
I've made a lot of money on crypto, but day trading, and it's unregulated. And you have these exchanges that obviously are not sound. And I think it puts consumers in a lot of risk. And I think retirement savers who went into all these Bitcoin IRAs got crushed.
Yeah.
And I warned people beforehand. I said, this is risk money investment. This is not where you put money that you worked your whole life for.
Yeah, that is absolutely
And
true.
I think it's a shame what's happened to so many people who thought they were going to become Bitcoin millionaires, and people have lost tons and tons. And I think in today's world, where I get, listen, I have my Harvard cohorts who send me their analysis of where things are going every single day. And I laugh at them and say I can get better advice from my mailman. And I say this for two reasons. One, because I like to riddle, because they think it's smart. And two, because no one can run a program today to tell you where we're going to be in 1 year. That's how things are. It's so crazy out there. And with that knowledge of knowing that there's no predictable outcome right now, gold and silver make sense. And that's why I tell people gold and silver should be part of everyone's portfolio. And especially, we didn't even talk about money and the potential of a central bank digital currency and the changing evolution of money. Money is not going to look the same in the next 5-10 years.
It doesn't really
Things
now,
only
hardly.
change.
Yeah.
And everyone needs to have something outside.
How does if the federal government, now we're running over, but that's okay because I want to know the answer to this. If the federal government does come up with a digital currency, how does that affect gold?
How does that affect gold?
Yeah.
I think it's going to affect gold in a very positive way upward.
Now, why is that?
Because people are going to want to create transfer transactions that aren't tracked by digital currency. And so the demand for gold and silver are going to increase as a result. Because this central bank digital currency is an invasion on our privacy.
That's funny. That's really funny because I've actually said that on many of our shows. It's like once people start having everything tracked and everything could be taxable, they're going to be like, uh-oh, what's my alternative?
What are you cheating on your taxes and then talking about it on the podcast?
I'm telling you, it's the human way.
How are we going to keep doing this, Aaron, if you get busted for tax fraud? Come on, man. Who's going to produce our podcast when you're busted for tax fraud?
There's plenty of producers out there. Don't tell him I said that, though. Okay, guys, we do have to cut this off. And I have to say, Devlin, before we end today, that when you said you day traded crypto, you became way more interesting to me. Okay, folks, we are out of time, but we are never out of topic. Dig a little deeper. You're going to find links to lots more info in our show notes. And remember, if your goal is to make more, to spend less, to retire rich, your online home is moneytalksnews.com. And don't forget to check out Miranda's online home as well. That is Miranda Marquit, MARQUIT.com. And to hook up with Devlin, just look for the link in our show notes. Or you can look for AugustaPreciousMetals.com. If you've got a question, comment, or topic you'd like to suggest, we would love to hear from you. Email us at hello@moneytalksnews.com. That's hello@moneytalksnews.com. And at the risk of repeating myself, let me say that if you like what we do something for us. Subscribe to our podcast. Takes you a couple of minutes, makes our parents proud. So if you like us, show us and subscribe. Thanks, Devlin, for your time today. I am Stacy Johnson.
I'm Miranda Marquit.
I'm Aaron Freeman.
Thanks for hanging out with us, everybody. We're going to see you right here next time.